As big uncertainties remain on tariffs, the economy, the Fed's path. Well, joining me now is Niles Investment Management founder Dan Niles. Dan, welcome. So the real impact of tariffs, you say, is going to be seen in future months. So this benign inflation read maybe doesn't mean much?
Yeah, it really doesn't mean anything, John. I mean, this reading is for prior months. Obviously, this tariff uncertainty started to kick in mid-February. And so we're going to have to see how much of that feeds through into CPI and PCE in coming months. The one positive is, don't forget, oil prices, which go into pretty much all goods, whether it's through transporting them or making them, they've come down from about $80 in mid-January into the mid-60s. So that's a big positive. And 10-year treasuries have come down from 4.8 to 4.3. And so that helps as well. And then let's not forget the dollar, down from about 110 to, let's say, 104. And that's also helpful. So the funny thing is, a lot of the things that I was worried about coming into this year, those have retreated, which is great. But that's why I was negative coming into the year and had cash as one of my top 5 picks entering the year. And none of the Magnificent Seven is a top 5 pick either. So there's puts and takes on both sides.
Now, I think in recent days you've been saying that with stocks dropping, you might have to hold your nose and buy some of those tech names that you were, I guess, rightfully bad-mouthing as being overvalued not too long ago. Did the tariff turbulence over the last couple of days stop you from picking those names up, or are you doing it?
No, I did it, and I did some more today. And let's be clear. It's not the tariffs knocking these tech stocks down. It is the fact that revenue estimates for 6 out of the 7 biggest in the Mag 7 all went down for Q1 after reporting Q4. So there's this common misperception that, oh my God, it's tariffs hurting these stocks. That's not it. It's earnings hurting these stocks. And that's why the Magnificent Seven are down 13% year to date. But if you look overseas at KWEB, which is the China Internet ETF, that's up 22% year to date. And even if you look at some of the people we're having tariff, spats with, Mexico. That, if you look at EWW, which is the Mexico ETF, that's up 9% year to date. The Europe ETF up 15%. So
I hear what you're saying, Dan, but let me, I know you argue the tariffs themselves aren't doing it, but isn't it kind of like turning up the lights at the party? I mean, sure, the music hasn't stopped, but when the lights come on, it feels a little less fun. The tariffs, do they make the markets for retail investors and maybe some of those that were leaning into risk, does it make it feel a little less fun?
Well, it should, because you shouldn't be investing just based on the fact that stock prices are going up. And that means you're going to have an unhealthy market. So this kind of uncertainty where people have to actually sit down and go, well, should I be buying Tesla when they had deliveries down for the first time in over a decade? Maybe I shouldn't. And so I think that, though, goes through to all tech stocks. And I think this year you're going to get out of talking about the Magnificent Seven as a group and start to talk about them as individual companies, because each one of them has very different drivers. And even today you saw that with some of the names down and others up, most of them up, actually. But so you're going to start to see some differentiation, which I think is good. And you're also having people finally starting to talk maybe about valuations and what risk are you taking buying different names when some are not growing, trading at 30 multiples, and others are that are trading in the low 20s. And so all of those things got to come into play. And so you're 100% right. Does it make it tougher if all you're doing is looking at a stock chart? Absolutely. But I think when you start to focus in on fundamentals, it actually makes it a lot better, because then risk and reward are both getting worked into the equation versus just, well, the chart looks good, so I'm going to buy it.